The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
Well, welcome to the Accunet Mortgage and Realty Show. I'm Brian Wickert, the owner and president of Accunet Mortgage and Accunet Realty Advisors. And I'm joined this morning not by the younger, taller, and more handsome David Wickert, but one of David's team members, Mr. Kevin Custer, who is our loan consultant and chief technology wizard. Welcome to the radio show, Kevin.
Thank you, Brian, for having me.
You bet. I was just looking up, and Kevin's been with us about 3 years and has already closed 314 loans for the company, which would take a typical loan officer, working at a bank, probably more like 6 or 7 years to get that level, at least double, maybe a decade. And so, that's why even our 3-year experienced loan consultants are really just as experienced as somebody who's been in the business 10 years, more at-bats. What do you like about being a loan consultant, Kevin?
Absolutely, Brian. Great question. Typically, the biggest thing that I like about being a loan officer is being able to help people find the best deal that fits their family. Not everyone is a one-size-fits-all when it comes to a mortgage, so listening to your customer and finding what fits them best is the most rewarding.
Yeah, we're kind of the diagnosticians, and when you're trying to help somebody buy a home, that's a pretty exciting time in their life, especially if they're a first-time home buyer. And if you're refinancing, man, we're helping them save a lot of money. What kind of refis have you been seeing lately? More the cash out or the save the payment?
Mostly on saving the payment. Right now, rates are at a kind of a record low, and people are always calling in looking to be able to shave a couple points off their interest rate.
Anybody trying to pay off the loan faster?
Absolutely. A lot of people are shifting to a 15-year fixed.
Okay. Not too much demand for the 20-year, I wouldn't think, because the rate difference just isn't there?
Correct.
Yeah. All right. Well, welcome to the show. We'll be batting it back and forth here as we go through. I was lucky enough, Kevin, to be on the WTMJ 2020 program, which was broadcast live all day on Monday from the Potawatomi, what's that called? Northern Lights Theater, which I'd never been to. Have you ever been there?
I have not.
Okay, really cool, like a 350-seat theater, very Las Vegas-y. And one of the things that Jeff Wagner, who was the host of our segment, asked was, what did I think the election year would do relative to interest rates? And I tried not to be snotty when I said absolutely nothing. But the fact is that any correlation between an election year and interest rates is pretty much just coincidental. It's not really cause and effect. But what I was able to share is that right now the forecast from the really smart people, not me, but the economists over at Fannie Mae and Freddie Mac and the Mortgage Bankers Association of America, they are calling for the 30-year fixed rate to stay within the range of 3.4, which is lower than it is now, to about 3.7 all of next year. How does that make you feel?
It's an exciting time to be a loan officer and to help people find a better payment for themselves.
Yeah. It's fabulous is what I call it. Because only at the end of 2018, these same economists were predicting that interest rates would be at about 5 right now in the fall of 2019. So we are living the dream. One thing that I did read this week, though, was that the risk to interest rates would be if the Trump administration does actually sign a deal with China, because that's what has the whole global economy on pins and needles, is this whole trade war between the world's two largest economies. And that has caused, big angst in Europe, not to mention Britain is going to exit from the European Union at the end of this month, which to me, I'm surprised that there's not more anxiety over that, just by the way. But if Trump and the Chinese do come to an agreement, which they are talking, that could cause rates to go up in my opinion, and I think the opinion of a lot of people out there. So one of the things that I shared with Jeff Wagner in the group on Monday was that if we look at the housing market in Wisconsin, or more particularly in southeastern Wisconsin, it is fabulous. It is a lot stronger in the last 3 years, including this year, than it was at what we used to think of as the peak of the housing market, which was back in 2007. So check this out, Kevin. According to the Milwaukee, or the Greater Milwaukee Association of Realtors, the MLS data, we sold 4,000 more homes and condos in 2018 than we did at what we all think of as the 2007 peak year. That's a 22% increase in the number of sales, and the dollar value was up over $1 billion. The total dollar volume was $5.4 billion last year, and that's a 30% increase compared to 2007. Median sales price is up 9% from that time period, so from $193,000 in 2007 all the way up to $210,000 last year. But there were fewer condos and single-family homes listed for sale last year. Now, this is kind of shocking. 11,600 fewer homes and condos listed in 2018. That's just in the 5-county Milwaukee metro area compared to 2007. What do you think that did to prices, Kevin?
Definitely made them increase, sir.
That's right. Are you an economics major?
I am not.
No. But the old law of supply and demand is that if you've got the supply dropping by 11,600 and the demand going up by 4,000, that is the recipe for higher prices. All right, when we come back, we're going to talk about a police officer that Kevin helped buy a home and overcome a really nasty medical collection that popped up at the last minute. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Don't just find a house, find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
And remember, if you've got a question or comment, you can reach us on the Accunet Mortgage Talk and Text line, which is 414-799-1620. All right, so Kevin Custer's here with us, one of our loan consultants, and I asked him, because he knew he was going to come on the show today, hey, do you have a good story recently that you think the audience would benefit from? And you came up with a great one where you're trying to help a police officer and his wife buy a home, and there was a change in the credit score, because of course we like to give everybody rock solid pre-approval, but credit reports are only good for so long. So as we kind of turn the corner and they're about to write the offer, we have to update their credit report. And what happened?
Unfortunately, with the updating credit score, we saw that there was a medical payment that showed up, a medical collection of the amount of $40, and it drastically decreased their credit score.
And from what to what?
We were over 740, down into the 660 range.
Ooh, and what did that do? What problem did that cause relative to the transaction?
Absolutely. Unfortunately, the interest rate went up, and the second thing was that because we were putting less than 20% down, we did have private mortgage insurance, and that also increased.
And by how much?
By the ballpark, about $150 per month.
Ouch. $150 on the private mortgage insurance, and what about on the interest rate? Or is that the sum total of both?
That would just be the private mortgage insurance. Plus, with the interest rate, we were looking at about a total increase of about $250 per month to the borrower.
Wow, that is rough. And on what kind of? You remember what the loan amount was roughly?
We were right in about the $200,000 range.
So that's a big payment increase on a relatively, middle of the road type of a loan size. And why did the medical collection show up? Was it a recent medical collection, or?
Believe it or not, the medical collection was about 3 years old. The debt was actually bought from a different medical collection, and they decided to happen to be reporting at the same time that we turned around or updating the credit report.
All right, so let me say that a different way. So when you have a collection account, and you said this was from like 3 years earlier,
correct.
Collection agency number one, who buys the collectible account from some medical practice, right? They say, here, I'll give you $10 and I'll try to go collect this $40. They can give up on it, and then they can later sell the right to go after that collection to a second collection agency. That agency then started to go after our home buyer anew, right? A fresh, like, hey, now we're going to report it again. And so it was that unfortunate circumstance of this guy's $40 collection account getting sold that caused the problem. All right, so what do we do to help him out?
Absolutely. Kind of the first step for Accunet was to be able to ensure that the borrower was going to be able to keep the payment within an affordable means for themselves. So we had our senior vice president of operations get on the phone with our mortgage insurance companies and be able to find some exceptions and try to get the price point down for our borrowers. So that way,
because we had the earlier credit report that said 740, and now we have this new one that's like, look, you can see what's going on here. Is this really indicative of what this borrower's credit likelihood of repaying the loan really is?
Correct. And then we found some success with our mortgage insurance companies and our investors and being able to make some exceptions and, trying to create a bad scenario and turn it into something a little bit better for our customers.
And then didn't you also have his wife call the collection agency?
And this is where the story really turns to, a good ending is where we were able to get the borrower's wife to call into the collection agency and work out a deal with the collection agency to actually have it deleted from their credit report in order to, and they satisfied and paid the medical bill, and It was completely removed from the credit report, which boosted them back to 740.
And usually when you call and when a consumer calls, because only the consumer can do that, the first person who answers will say, no, I can't do that. And how many times, you told me off the air, how many times did she call?
3.
And what was the key to her success?
She was able to show some emotion and cry on the phone and really show the importance of being able to get this removed and for
how
her
this
family.
was impacting her transaction. So there you go, folks. If at first you don't succeed, sometimes you got to try and cry again, and don't settle for the first answer. So she called a bunch of times and got it done. Well, that's the kind of happy ending and what we try to do for all of our clients. All right, you're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
And today also with Kevin Custer, one of Accunet's fine loan consultants, part of our millennial loan consulting teams. And just by the way, a number I just looked up online, the percentage of home buyers who are now millennials is 37%. Does that kind of fit with your experience of late?
Absolutely. It does seem like there's a massive uptick in millennials starting to seek pre-approvals and looking to purchase their first home.
Yeah. They're, and I think this has been happening for a couple of years. So we did get a text from one of our listeners, Justin. Thank you for texting in, Justin. And he was asking and observing that, boy, earlier in the show I was talking about how home sales in southeastern Wisconsin were up quite nicely compared to 2007. And as a matter of fact, statewide, that trend is still true, at least for home sales where there's assistance from a member of the National Association of Realtors, in other words, stuff that's captured on the MLS. We've been averaging the last 3 years about 82 to 83,000 condo and home sales. And again, that's up from around 58,000 back in the former boom price year of 2007. And so Justin's asking, boy, is there anything on the horizon that would take the air out of that balloon? And my answer is not that I can readily see. And that's because you have this really strong demand of the largest generation ever, called the millennials, is still going to be in their peak home buying years for quite a while. In fact, the chart that I'm looking at from the National Association of Realtors divides the millennials into older millennials, which are up to David's age, in other words, born as late as 1989, and then the younger millennials, so younger people. And so the older millennials account for 26% of home sales. The younger millennials are accounting for 11%. So I would assume that the younger millennials, as they age up, are going to enter into that home buying. Somebody asked me this week, too, if the millennials were buying homes. And I said, absolutely yes, because it is the inescapable fact that as people start to get married and have children, they all of a sudden want to have a home of their own. It just kind of seems to be natural human behavior, at least here in the Midwest. All right, so in the couple minutes we have left before the news, I would like to tell you that in September in southeastern Wisconsin, much to my surprise, home sales were up. And the reason I'm surprised is because there is a lack of listings still. We keep hearing that from our real estate agent friends, and the numbers show that. So while the combined number of single-family homes and condo sales was up in September, if you break them apart, condo sales were actually down. Condo sales, in fact, were down 7.5% in September compared to a year earlier, which is only 25 closed sales in the entire 5-county area. So you're kind of dealing with the law of small numbers here. The median condo selling price was $185,000 last month. That is up 20 grand, or 12% from a year ago. Now, Kevin, does that mean that the value of all condos in southeastern Wisconsin went up 12%?
Absolutely not.
All right, good answer. Proving his economist chops. It could be that maybe those condos were newer and better and bigger than the condos that sold last year. But there still is a decided shortage from what I'm hearing from real estate agents in the condo market. On the other side of the coin, single-family detached homes, those sales were up by, what percentage here? Almost 8%. 1,537 homes sold with the help of a realtor. And the median sales price was also up 8%. $247,500 was the median sales price. Now, if I wanted to write a true but misleading headline, I could say that the median sales price fell 3% from August, because it did. But again, that's just because of the mix of homes that sold. Still very robust figures. All right, we're coming up here on the news break, and after the news, we'll give you an update on where interest rates ended the week and also just how fast homes are selling in the affordable price ranges.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
All right, welcome back. Remember, if you've got a comment or a question, you can reach us on the Accunet Mortgage Talk and Text line, which is 414-799-1620. I'm Brian Wickert here this morning with Kevin Custer, one of our loan consultants, and filling in here for David Wickert. Thanks again, Kevin, for making the trip over here from Janesville.
Absolutely. Thank you again for having me on.
You're welcome. And so let's do a little rate roundup here as we come around to the bottom of the hour. Interest rates touched their lows at the very beginning of September. Then the Federal Reserve cut rates on the 19th. And in between there, and really for most of the rest of the month of September, mortgage rates actually went up a little bit. And that surprises a lot of people. Did you have anybody call you, Kevin, and say, hey, I saw the Fed cut rates. Did mortgage rates drop?
Absolutely. That's almost the first inclination of a borrower looking at the news and seeing that the rate had the Fed cut the rates, but actually like Brian indicated, they actually went up a little bit.
Yeah, they actually went up. And that's because when the Fed cuts rates, they're really only cutting two rates that have to do with banks lending money to each other, and the only rate that is directly affected is the prime rate. The prime rate is the index that's used for home equity lines of credit. And so that dropped from 5.25 down to 5. All right, so remember that number 5. And let's tell you what you can get a fixed rate mortgage for right now. This is on a $200,000 loan if you have 25% equity and all the other right stuff. On a regular refinance where you're just looking to pay off your existing balance and lower your monthly payment, we could offer 3.625. That's an APR of 3.67, and that would be with $1,650 of total loan costs. On the other hand, I bet a lot more people would rather have 3.75 with half the loan costs. What do you say? What percentage of people do you find in a refinance, Kevin, take the lower closing cost?
Almost 80%. One of the big things that we do at Accunet is guide people through the different loan options that we present, and most people see the benefits that it might take 8 or 9 years to be able to pay points to recoup the spending that they're investing into lowering their interest rate.
Right. And on this particular example, just by the way, the payment difference between 3,625 and 375 is $14 a month. So, I'm sure you do this a zillion times a week. You say, well, is it worth it to you, Mr. or Mrs. or Ms., to spend $825 in order to save $14 a month? And most people go, I will keep the $825. Even though a lot of people don't bring any cash to closing, we're very careful to point out what the actual cost is, because the amount of money you bring to closing isn't necessarily indicative of the costs that you paid, which is why those guys at the Rocket do so much business, because, their costs are really high. But it doesn't feel like they're that high when you're financing them and rolling them into your new loan amount. Then on a 15-year fixed, again, this is without taking cash out, the interest rate is 3.375, and that would also be with the same $834. That includes the appraisal. That includes closing. That includes the title update. We don't have any $995 loan processing fees like all the big banks seem to have these days, and certainly the lender whose name rhymes with Schmicken. Boy, I was really kind of gritting my teeth watching the Brewer playoff game, at least the last one that I was tuning into. They were all over that thing. Did you notice that?
Unfortunately, I was not able to watch.
Oh, okay. Well, you missed a harrowing finish. All right, so the bottom line is that rates are really nice and low, and this, I want to point out, happened despite a really good jobs report, or at least I thought it was a good jobs report on Friday, where we learned that the unemployment rate in America dipped to 3.5%, the lowest that it has been since 1969, 50-year low, and the economy created 136,000 new jobs. So I read some headlines that were like, well, job growth is slowing down. Well, it's like, no kidding. We're running out of workers. How do you hire more people? And what we're really doing, Kevin, is we're drawing people off the sidelines, who had decided to leave the workforce. That's where we're getting a lot of our new workers from. And, there's not an inexhaustible supply of those people available and ready to come back to the workforce. And by the way, on Friday, stocks rose 1.5%. Stock values rose 1.5%. That is normally then the recipe for interest rates getting worse, but didn't happen on Friday. Interest rates actually got a smidgen better. So my message to folks is don't dawdle. Rates are great right now. If you've been thinking of refinancing, doesn't everybody already ask you that too? Do you think rates are going to go lower?
Oh, absolutely.
Yeah. Hey, I can lock you in right now at 3.75 with really low cost. Well, do you think rates are going to go lower? It's like, they weren't supposed to be this low. Did I mention that, less than a year ago, everybody's predicting rates would be 5 right now? So, let's take the bird in the hand. All right, when we come back from this break, let's talk about FHA lending and give our listeners, and especially our real estate agents, a little reminder on some of the FHA appraisal requirements. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
All right, and I just want to remind everybody a little bit about FHA loans, which are fabulous. Those are loans that are guaranteed by the federal government and directly by the federal government through an insurance plan. FHA stands for Federal Housing Administration, and a home buyer taking an FHA loan only has to put 3.5% down, and then they do get to pay government mortgage insurance. It's not PMI, which stands for private mortgage insurance. It's government mortgage insurance. And they do pay that for the life of the loan, although it does go down a little bit every year. And they pay it for the life of the loan if they get a 30-year mortgage and I think put less than, is it 10% down? Yeah, Kevin? Kevin nodding his head.
Correct.
Yep. And so there's also an upfront mortgage insurance premium that the borrower is allowed to finance on top of their loan. And so the upshot, though, is when doing an FHA loan, there are 3 things that are different relative to the appraisal. And that can trip us up. And I have a story where one of them, it happened this week. All right, so the story is this particular FHA appraisal was stuck in underwriting review. And here we were now a week before the financing and appraisal contingency deadline. So that's the date by which the borrower has to say either I have the loan or I don't, and the appraisal's okay or it's not. And so we didn't really have for unusual reasons, we did not know whether we would actually receive the appraisal report by next Thursday, this coming Thursday, which was the deadline. And so I was proactively, on behalf of our team, calling the home buyers and the real estate agent to kind of game plan. Okay, what should we do? What are our options? Let's put our heads together. I've got some ideas. And so there were two things, even though we had not seen the appraisal, that our inside source at the FHA servicer, where the underwriting was taking place, could tell us. And one was that the appraiser was calling for a handrail to be installed anywhere where there was more than 3 steps, a rise of 3 steps. Looking at the pictures from the MLS, because remember, we didn't have the appraisal back yet, we couldn't tell what they were talking about. There was a patio or a deck in the back, and we thought, man, are they talking about the deck? And then the other thing that the appraiser had called out in the report was that there was hairline crack in the basement floor and in the garage floor. And we had this come up on one other FHA appraisal where when you mention something, if you're an appraiser or a lender and you bring something up, sometimes another person in the mortgage food chain, in this case a FHA designated or direct endorsement underwriter, those are special underwriters that make like over $100,000 a year because they have the approval to insure FHA loans. If they see that the appraiser says, well, there's a hairline crack in the basement floor, a direct endorsement FHA underwriter can look at that and say, well, does that have an impact on the foundation? Even though, 99 out of 100 people will say, no, it's just a crack in the floor. Sometimes you get a direct endorsement underwriter who says, I need to be sure. And in one case earlier this year, we had a direct endorsement underwriter say, you got to get a structural engineer to go out there and tell us there's no problem with the basement foundation. So here we are a week before the appraisal contingency. We know that there's going to be handrails required, but we're not quite sure where. And we might have a problem, but we're not sure about this crack in the floor. So I get on the phone with a structural engineer that I know that's done work for me and my family in the past. And it just so happens he can go out like tomorrow and look at the property. And I say, I will pay for it, right? We will pay the $400 for the structural engineer because we're quite confident this is going to be a no-brainer. And then I said, relative to this stairway thing, what's the story on that? And the real estate agent just went off on me, and I did not appreciate it. Okay. Because here I am trying to get ahead of the curve, Kevin. And she's just saying things like, well, I will call and get an extension on the, offer to purchase, but I'm also going to tell that listing agent never, ever to use Accunet Mortgage, ever. I'm like, wait a minute. I don't appreciate that because we're trying to get ahead of the game. This is very unusual circumstances here. And so, you know what? The appraisal came in on Friday. And we didn't have to do anything about the crack. And then we could see the picture, and it was 5 steps leading up from the driveway up to the front sidewalk going into the home. So hear me, Accunet Mortgage and Realty Show listeners. If there are ever more than 3 steps in a home that's being financed with an FHA loan, those steps must have a handrail. Period. End of story. There was a big discussion on our phone call about, well, the local home inspector doesn't need it according to code. Code don't matter. FHA rule, more than 3 steps inside or outside the house, going down to the basement, going up to the second floor, going from the sidewalk up to the house, you got to have a handrail. And the other thing with FHA loans, just by the way, any broken glass has to be fixed, and any chipped or peeling paint. So if you are a buyer or a real estate agent and you're working on a purchase transaction where there's peeling or chipping paint, you're going to have that scraped and painted. Why? Lead poisoning, and that is not something that can be waived. If there's any kind of a trip hazard like uneven pavement, that's going to have to be fixed. And any broken glass or steps, more than 3 steps, going to have a handrail. All right, there's your FHA primer for the day. When we come back, we're going to tell you how well we did at the Milwaukee Habitat Gala this last week. and give you the details on that. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Well, this last Thursday we got together for the annual Milwaukee Habitat for Humanity Gala, and we held it for the second year in a row at their 100-year-old wood shop right there on Holton, just south of WTMJ. And in fact, we had some WTMJ folks at our table who asked some excellent questions, one of which was, typically, Kevin, a lot of people think that the Habitat's a giveaway, that people get a house for nothing or something like that. And that's far from the truth. The homeowners have to complete home ownership education, first of all. They have to have a job because they are going to pay back a mortgage. Now, it's a lower interest rate mortgage, somewhere between 0 and 3%, depending on their income. And they have to put in about 7 full-time weeks of donated labor. Half of that can come from their family members or friends, but they have to really put in. There are not many people I know who would, in addition to working their job, be able to do, almost 2 months of donated labor. They got to squeeze that in while they're working. So it is not a hand out. It is definitely a hand up. And one of the questions that a WTMJ person asked us was, hey, do people get into these homes? Is there any restriction on them flipping them? And I said, yes, there is. There's a 5-year recapture, some kind, if they flip the home, but they don't do it. In fact, because they have so much vested in the property. I mean, literally their own sweat, maybe a little blood if they swung the hammer incorrectly, like I've done on occasion. Oh, there's Kevin's showing me a blackened nail, thumbnail that is. So the answer is no. And in fact, the featured family, who was featured in a really well done video, had been in their Habitat home 20 years. 20 years. They are not leaving. And so what's really cool about what Habitat has been doing the last 5 years is not only are we helping individual homeowners, but then we're really concentrating our firepower in specific neighborhoods. We did Washington Park, and now last year we started in the Midtown neighborhood, which is where our most recently sponsored home is. And we're going to be doing that another year, and also expanding into the Harambe neighborhood, which is all around North Avenue, like in the 20s and 30s of streets. So the terrific news, Accunet put a match out there for $65,000 we ended up doing. And together, everybody who attended that gala, we raised a grand total of $360,000, which was $60,000 more than the goal that the organization had set. So thank you to everybody who attended that. It is a fantastic organization that does great work in our community, and we are delighted to be part of that. One thing we mentioned at the tease of the show was that we've had some loans lately where we all have to ask the question, are you involved in a lawsuit? And we've had some people say yes. We don't have time to answer that question right now. We'll get to that, when we're back. I don't know if we have a show next week or not. You're familiar with the Packers schedule? If there's a noon game, we don't have a show. But we'll get to that in another episode of the show. For right now, I just want to remind folks that rates are really low. We're talking about 3.75% with no points on a 30-year fixed, only $834 of closing costs. The APR is 3.79. And that is fabulous. Don't count on the rates getting lower. That may not happen. Could it happen? Sure. It might, but they might not. And so why not find out exactly how much you can save? Kevin might be your loan consultant. Now you know how smart he is. He might be the guy that comes back to you with some numbers. Also, though, still time to buy a home yet this year. I've bought homes in November and December. And if you want to get started with that, why not let us help you? With a rock-solid guaranteed pre-approval, you can get started with that, or a no Social Security number required refi checkup by clicking on that blue button at Accunet.com. That's all we have time for today. You've been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.